I was looking at the China summit for announcement. I'm going to have to move the goalposts. I think it's already been signed. Now they're trying to time it with the liquidity needs of the major IPOs that are coming. So that's my next goalpost.
The SpaceX IPO is fantasy, in my opinion. It's priced at 100 times sales. You're going to default on them just like broadband in the 2000 bubble. It's a Ponzi scheme on trillions of dollars scale. But at some point, the gamma squeeze has to undo. The further from equilibrium we are, the more violent and destructive the return trip.
Capitalism is dead. There's no doubt about it. The solution to America dominating the world is to get data centers in space and power artificial intelligence.
My optimistic doom loop is that Warsh is here to blow up the system.
Buckle up if he's ready to kill this AI and IPO market.
Simon, Dave, thank you so much for jumping back on for an update, guys. Really appreciate you stopping by. We've got a lot to cover today. Essentially, we have the AI and the SpaceX IPOs that are kind of reshaping the market. We got Kevin Warsh and the Fed and what they're going to do about rising interest rates. And of course, the Strait of Hormuz, which we recently had the US and Iran technically break the ceasefire, but yet somehow the deal seems to be progressing forward. We're just days away. So Simon, starting with you, we flagged the China summit as when we were expecting to get the deal. It's now come and gone with no announcement. Yet it does seem like things have definitely changed. So what's your read on the situation? Are we actually getting close to a deal? And is there something that's keeping this dragging on?
Yeah. So yeah, I'm going to have to move the goalposts. I was looking at the China summit for announcement, but I do think it drove things forward. So it was very uneventful in Western media. But what actually was it? Well, it was essentially all of the key players from the financial industrial complex and the technical industrial complex, and a few players from military side, meeting with Xi Jinping. And I would call it more of a check-in report. You know, you don't go to these meetings to start negotiations. You go to these meetings for optical reasons. So when you need the photo moment, you do the actual meeting. And there was a bit of symbology. You know, it was very much on China's terms. There was an element of, you know, shorter chair for Trump, higher chair for Xi Jinping, a little bit of optics, not meeting at the airport, which is actually how he did it with Putin. So he kind of put them both on equal terms. But I think the most important thing from it was that it was actually the real players in the AI race and those that are going to be determining the future of payment corridors that Trump brought to the meeting. And it also led to a bit of a stock market pop, which was, you know, the desired photo moment. Immediately after it, we got about 20 shipments passing through the strait. And we had right now all of the what I call feeding public narrative for the relative audience. So you've got Israel feeding its relevant narrative. You've got Trump feeding its his narrative. And you've got Iran feeding their narrative when all of them are sat down negotiating. So what people said would never happen has already got a memorandum of understanding. However, I believe that everyone needs their exit off-ramp narrative. And that's what I think we're leading to. You know, Trump needs the photographic moment of, you know, I got the best deal. And I forced Iran to do a deal. That's the optics he needs going into the midterm. Iran needs to say, we resisted under all pressure. We never caved in. We got the toll booth or whatever terms they get in the end. And then Israel needs to say, you know, they were doing the good cop, bad cop. Anytime America wanted to delay, they say Israel blackmailed us and persuaded us to do it. That leads to a change in the terms. And then America and everyone in Pakistan comes back with a slightly updated memorandum of understanding. I think it's already been signed. And now they're just playing theatrics in order to get what the final MOU is. And then there'll be a 30-day, 60-day, 90-day, you know, sanction relief, stroke, reparation investment, stroke, unfrozen funds. And everyone walks away with their victory narrative and we move to the next stage. So that's how I interpreted it. And leading into the other stories, and I'll pause here, I think now they're trying to time it with the liquidity needs of the major IPOs that are coming. So that's my next goalpost. I think they really need major liquidity leading into the IPOs, and then also making it a successful IPO. And we've kind of led to these all or nothing events with these IPOs. So I'll kind of pause there.
Before I let Dave jump in here, I just want to quickly with regards to the way that they're hanging on to the deal coming narrative. So what I kind of mean by that is previously it seems like every time they said they were close to a deal, it would last for about 24 hours. It tended to be on like a Friday or Sunday going into the Monday markets open. But they've held on that like we're close to a deal for a few days now. Are you reading that as a significant change, or am I making something out of nothing?
No, I believe the deal is still coming. Now, there may be one more escalate to de-escalate, because as I said, Trump needs his photo ops moment. If he doesn't get his photo ops, then the midterm election's done. And he kind of went off the rant and said, let's move this into Abraham Accords. So in order to get a deal, everyone needs to join Abraham Accords. That sets off a new negotiation cycle with all the potential members. Now, many of them probably won't join, and Abraham Accords may be dead. However, we've still got the holdout where Saudi Arabia is saying, unless there's a Palestinian solution, there is no Abraham Accords. So it kind of just sets up the next phase of US exit from the region. But I think they're trying to time it. You can tell the market doesn't believe that there's another escalation cycle. We got gold at 4,500. We got VIX at about 17. That's, if it would be above 25, 30 if they believe that this was going to enter into another kinetic phase. We got record highs on the S&P, above 7,500 again. What has changed is bond yields. Bond yields are showing significant stress, and they went above the 5.1% on the 30-year and 4.6% on the 10-year. And that creates serious issues in the real estate market. And so the narrative brought it down ever so slightly, but they are far away from where they need to be. And so the bond market is really saying, get this wrapped up. We can move to an equity market IPO, and everything's good. But oil prices will go back up again if there is another escalate to de-escalate phase. But all in all, the market is definitely not pricing in World War III, a nuclear reaction from Israel, or something that's going to be more systemic.
Dave, what's your read on the situation? What are your thoughts there?
I'm guessing more. The SpaceX IPO is fantasy, in my opinion. It's priced at 100 times sales, which is just ludicrous. The fact that they have to jam liquidity into the system to accept these IPOs tells me that we're in a dying, gasping final phase of capitalism. It just feels truly terrible that this kind of crap has to occur. I watched Larry Fink on stage the other day saying, look, harsh reality is all these data centers are going to have to come out of the pension funds of the capital is going to have to come out of pension funds of mom and pop. And I'm going, and then what you're going to do is you're going to default on them just like broadband in the 2000 bubble, and you're going to fuck the pension funds completely. And so again, gasping capitalism. The markets, the equity markets, are suspicious as hell. They look to me like before the Iran war, they were rolling over in a serious way. It really looked like it was forming this mound of a top and was finally gonna projectile vomit its way through what I think should be a secular bear market. And then all of a sudden, just out of the blue, it just spikes and just never looks back. And you hear stories of the gamma squeeze, which actually makes sense to me. And I find a gamma squeeze particularly evil because of the fact that it takes a market that's going up and then it pumps the mechanism to make it go up faster and faster and faster. So it strikes me as a Ponzi scheme on trillions of dollars scales. And I could imagine the gamma squeeze being driven by call option buying by price insensitive buyers, aka sovereign states of some kind. Ours would be my first choice, probably, if I had to guess. But at some point, the gamma squeeze has to undo because the call option buyer has to stop buying. Well, they don't have to, but you would think they would. And then all of a sudden, Wall Street's got to liquidate all those equities they bought as hedges against the call options. And so they're going to all get sold. And so it just completely unwinds. And that could be the beginning of a secular bear market. I don't know. It really looks to me like someone put cement blocks under the Iran war to make sure that the headlines were about the war, not about the markets. I totally agree that the bond market is showing stress. My nightmare scenario for many, many years has been a secular bond and equity market simultaneously. We haven't seen one of those since the 70s. And that would be ugly. And I think the bond market I'm seeing serious players quoting, 12 to 14% yields over the next half dozen years. That would destroy there'd be a lot of corpses in the street if that happened. So the idea that markets look forward always makes me laugh. Shut up, Doug. That's my dog who was almost put down a week ago and is now thriving. I think we're so off kilter. And here, as a scientist, what I'll tell you is everything I know says that when you displace the system from equilibrium, the return trip, the further from equilibrium we are, the more violent and destructive the return trip. So think avalanche, earthquake, bombs, you name it, exploding laboratory experiments that got out of whack. And in all those cases, it's a return to stability the hard way. And it seems to me that for the last dozen years, we have pushed the markets way past a logical topping point. And I made a compelling case, I think, in 2015 that the market had yet again gotten in the nosebleed section. And 10 years later, here we are, much, much higher. And by reasonable valuation metrics, we're 150, 200% over historical average valuation. I sincerely believe that if we don't have a regression to the mean in our future, then capitalism is destroyed. And so the optimist says we're going to have a regression to the mean. The pessimist says we're not. and so that puts it in the 75% correction, assuming it doesn't do any damage. That just gets us back to fair value, assuming the economy doesn't get destroyed and wiped out and banged up. And the nightmare scenario is it takes a dozen years to do it, so that the boomers will basically be tortured to death in their final years. So that's what I watch. My question I have is, who's driving the cab right now? Iran, China, or U.S., Israel? It looks, my completely uneducated guess is that Iran, China have total control of the story.
Simon?
Is that right, Simon?
I completely agree with that, but also I'd add another dimension to that, which I've said America is not a sovereign state. It is controlled by complexes. And so the financial industrial complex is partnering with the Gulf sovereign wealth funds, and China normalized between Iran and Saudi Arabia. And so Iran, China, BRICS, I believe they're executing an expulsion from the US, from the region. And the China meeting was really a check-in between the FIC and China. And so it's not really US. And tying the conversations together, US is, the stock market, capitalism is dead. There's no doubt about it, because the number one contributing factor to whether this market continues is really three things, but one overarching, which is money printing. In order to fix the bond market, the only thing you can do to get those yields down so that you don't crash the real estate market, which also breaks banking, is for the Fed to buy those bonds. And so it looks like the Kevin Walsh effect, let's say. I'm really confused as to what he will end up doing. I think I know what he's going to end up doing, but it's the opposite of what's being said, which is that you get those short-term rates down. The Fed expands the balance sheet, and you need a few things in order to do that. So the stock market is really a function of money printing. So the balance sheet has to expand. Maybe you could do it some covert way where you do some regulatory reform and the banks expand their balance sheet and you have to compensate them with new lax liquidity requirements or reserve requirements. Maybe there's a way of doing it that way. The second thing is ETF inclusion and index inclusion. And so they're changing the rules. They're saying now, if you do a $1 trillion IPO, you can be included in the index from day one. And so now Goldman Sachs is trying to rush out $3 trillion IPOs, OpenAI, Anthropic, and SpaceX. And so you really see the narrative lining up. The third thing is just media manipulation of narrative. And what we're really leading up to is a national security that if we do not figure out how to get data centers on space in order to control the world through AI and robotics, then China will take over the empire and communism will win. And so all of the podcasts, all of the VC bros, all of the tech executives, they're all pushing that the solution to America dominating the world is to get data centers in space and power artificial intelligence so that we can, so that the AI arms race really is won. And so they're really pushing out that, and that kind of coincides with these elaborate valuation $1 trillion IPOs that from day one will be included in the indexes, just so, like Larry Fink said, the pensioners that are buying these S&P ETFs and just are passively investing can really bootstrap the price so the banks like SoftBank that have got about a $60 billion leverage position in OpenAI is able to dump into this liquidity, and then they can open up the private credit markets and lead to a big money printing exercise, which will be justified under energy. There's an energy crisis which powers this AI. So we've got all the LNG, and we've got this. We need to win the national security arms race. That can justify a really big money printing exercise, and really they can just sacrifice the dollar as world reserve currency, and we can move into an inflationary cycle. And Kevin Walsh has already indicated that what he needs.
That's a Freudian slip, by the way. That was a Freudian slip right there.
Fed and Treasury merged.
Yes, it was, wasn't it?
It definitely was. But he's already indicated.
Scott Warsh.
He's already indicated we just need to change how we measure inflation and what we'll be using. So we're getting the old trick. Americans, the average American that is broke right now, that is on the poverty line, he's going to be paying more for his mortgages. His debt, credit card rates are going up. Food inflation, and energy prices are going up. That's basically everything that they can afford is going up. So they're really driving the K-shaped economy,
which they can't afford it, which they can't afford either.
Yeah,
because credit card debt has grown something like 9% a year for the last 3 years, and as Stephanie Pomboy says, they're not buying more units of anything; they are buying 9% more of the same number of units, and so the consumer in the Michigan consumer confidence numbers one of the two's at an all-time low. I think it's that one, but labor force participation's at a terribly low state too. So the jobs numbers are baloney. The claim, I hesitate to say this, Mike Green will be lurking out there, but I think inflation is way worse than they're telling us. Mike is arguing that that's a conspiracy theory. I think Mike's brilliant, but I don't agree with that part. And I still cling to the idea that for 15 years, Warsh has been talking about the absurdity of Fed policy. I have trouble imagining that was just a limited hangout. Now he's just going to do like all the other. And what really bothers me are the guys who, for the last 15 years, have said we kept rates too low, too long. And I always add to that too many times. And then to that, I now add, and you want to do it again? You sound like a fucking retard. That just makes no sense to me. So my optimistic doom loop is that Warsh is here to blow up the system.
Yeah. Well, if the Fed believes in capitalism, then blow up the system.
Right.
The Fed doesn't believe in capitalism. I think it's managing capital outflows for transnational capital, and trying to build a post-dollar dominated world. And so that involves asset stripping right till the end, until the banks won't accept treasury as collateral. And at the moment, everything's saying that the banks are still going to accept treasuries as collateral. All the foreign central banks, they're not accepting it. They're going into gold. Even India right now is telling its people, please stop buying gold with the rupee, while the Indian central bank is buying gold and printing rupees. And so
I know
it's central banks don't believe the story. The Fed will continue to this. So have we got a genuine regime change at the Fed? I don't know, but buckle up if he's ready to kill this AI and IPO market. There is.
So where's the capital going to? You talked about the passive flows, but passive flows aren't adequate to absorb $3 trillion IPOs.
No, which is why I think you got to pump the narrative that this is AI for national security, and we need to get data centers on the moon in order to power this. And it kind of ties as well with the Iran operation. Imagine you have a very symbolic moment, a bit like the British Empire's moment with the Suez Canal, but you get it with the Strait of Hormuz. And you also have the narrative that, by the way, it was, AI-powered drones and ballistic missiles. That, by the way, we're dependent upon China for the components. America can't produce them without China, which kind of shows that we're not going to World War III. But you get a bit of, the only way to deal with this is to print an exorbitant amount of money, increase the Fed balance sheet, or figure out how the banks do it, and just keep pumping the K-shaped economy. I just can't see any situation in which they give up and return to capitalism unless the gravity tells them that they've got no choice anymore.
I just had this image of China launching missiles and blowing up data centers on the moon. I have
Space Wars is definitely the next arms race.
There's already enough craters. What's another couple of craters on the moon? It's curious.
That's some big money printing you can justify right there, Dave.
That's exactly right. For many years, I've actually said that if you think the Fed works for the United States, you're dreaming. The Fed works for multinational banks, which have no sovereign ties whatsoever. So this is like, we've gone full Nathan Rothschild, right? We've really crossed the Rubicon. This is, I'm just gonna, here's what I keep next to my desk. It's a box cutter for slicing my wrist.
Oh dear.
or hijacking a plane. I don't know, one of the two.
Well, quickly, Simon, in that framework, I'm trying to think of the reason. Is it possible that part of the reason they have to push for this $1 trillion valuation to get it into the indexes, to get those passive flows, is to have the acceptable narrative that the public would take, right? If the public starts holding those positions as part of their retirement, and things start going to hell in a handbasket, then not only the military side, but they can justify propping them up for military reasons, and everybody feels like it's part of their actual savings, so they're fine with it and they're okay with the money printing going forward.
Yeah, I mean, but that has been the boomer story, right? It is there is a small class of Americans that the money printer is serving, which is those that got on the real estate ladder, and those that had the 401k for several decades and are coming to retirement. And so at what point are they going to rug pull them, or are they just going to, think about, you saw what Nvidia was doing. So Nvidia is now, past the $6 trillion valuation. In order to facilitate that, Trump was trying to enforce chip sales onto China. China came back and said, for national security, we prohibit any of our companies buying Nvidia chips. But you still got the pump in the market, and then it didn't correct to the same degree. Then they came out and said, right, we're going to take $85 billion and do share buybacks. And so they're speaking to the growth investor, trying to get more of their money. Now S&P is approaching the Magnificent Seven, controlling almost 50% of the S&P.
So let me see. The share buyback is because their shares are so cheap that they should buy back their shares. That's the Peter Lynch model. It doesn't seem to fit in the modern era. Just hasn't for 2 decades or 3 decades, but that's just had to insert that.
Yeah. Well, it's not. I think, Dave, you're still in analyzing real world fundamentals.
I'm analog.
Reality.
I'm analog, right?
This is just pumpamentals, or whatever we want to call it. And so the 85 billion isn't about investing in value for Nvidia. It's about attracting growth investors. So the tech bros that have sold their Bitcoin, sold their crypto, and are now, penny trading these IPOs as part of a gambling portfolio, because they're trying to, fit in the world today on Robinhood or whatever. But it also attracts the big growth money. It also, what they did is they increased their dividend per share from 1 cent to 25 cents. And so now they're trying to get Coca-Cola investors and your Berkshire Hathaway style investor thinking that this isn't only tech, this isn't only growth, this isn't only national security, this isn't only geopolitical significance with Fed money printing, it's also a dividend stock as well. And so Nvidia is, doing every trick to attract every single investor, because people are going to be selling their Nvidia in order to buy into these IPOs, and they've still got the circle jerk of selling contracts to each other, and the revenue that they're selling. I mean, these IPOs are selling revenue forward of about 5 years of the biggest growth story of a projected story that every single enterprise in the world is going to be adjusting and buying tokens of AI. Like the valuations are horrific.
Yeah. They're incredible. They're absolutely off the charts. I'm curious, Dave, your thoughts actually on that too, with basically the hyperscalers investing in the chip manufacturers, investing in the AI companies, and the money just going round and round and being marked as revenue on their balance sheet. I think I saw that and I think it's Anthropics or was it OpenAI's? One of them was similar valuations to Samsung, but like a fraction of the revenue actually coming in. So Dave, what are your thoughts on the AI circle jerk going on right now?
The metaphor I've liked for the last couple of months is the ping pong balls and the mouse traps in the big container, and it's a stable system, and then they throw in one ping pong ball and they all start flying all over the room. And so I have this religious level faith that capitalism is not dead, it's just in an induced coma, and that price discovery will be resurrected, and that I know of no way to document in history, except for if you want to include the present, of something that got way over value that didn't find its way back to dirt cheap. And so as a consequence, I think that we could write a textbook for the next boom bust book that describes this era and how completely idiotic it was. And so I think everything you described makes total sense to me. The one thing that I can't accept is that it'll work. Right? I think that's right. So I think this is a patient with stage 4 cancer of the liver, and they're going to faith healers in Indonesia and stuff to try to figure out how to cure their problem, when in fact it's time to put your affairs in order. And what bothers the shit out of me is the time variable. And so crashes do nothing. They absolutely do nothing. Because dip buyers have so much muscle memory for the last 4 decades, it's always paid to buy the dips. And so they can be depended on coming in to buy the dips, especially if the feds are buying call options and forcing gamma squeezes and things like that. But I believe at some point, it's just, all 4 engines are on fire. You're at 35,000 feet, and we're now saying, well, let's take it to 45,000 feet. And as they say in the manual, a flight manual, it says you will have enough gas to get to the crash site. and I think the crash site will be a multi-decade bear market. But it's consistent with the idea of pushing the United States out of the Middle East, of pushing the United States into a secondary status compared to its current status. And whether that's all intentional, I can't fathom. But if you want to know what you can't fathom, read Kathy O'Brien's book, Transformation. That makes all this look really very normal and realistic. Kathy O'Brien's book on MK Ultra will blow your brains out your ears. And I've somehow got to find out if this is true. It seems like we're in the Kathy O'Brien transformation phase of capitalism. So I've kind of lost my mind at this point. I was too bearish, and I wasn't too bearish in 0809. I had tons of cash. I actually I don't even know if I lost money during that particular bear market at all. I mean, I actually think there might have been 1 year little dip. I've never ridden anything down hard. Never in my life have I had big exposure to one of the big drawdowns. I've never lost 50% on my equities or anything, because I was out in 99. I was very underexposed in 07. And I do worry at some point karma's going to get me and find a way to make me ride a 50% or more downswing, even though I'm invested for the dystopian post-apocalyptic world.